Welcome to AGORACOM Talks, your weekly go-to source for the best small-cap headlines for over 65 million investors since 2007. We are coming at you fast today with breaking news across the board. The mission for this deep dive is simple. We are rapidly unpacking 5 major press release headlines and the hard financial and drilling data that compelled deeper investor research.
The stage is definitely set. We are analyzing sources spanning the entire market spectrum today: clean energy, AI, software, healthcare tech, and precious metals. It is really all about finding those hidden catalysts that the broader market might be missing.
Right, so let's get straight into it with our first breaking headline from HPQ Silicon Inc., trading on the TSX Venture under the symbol HPQ. The headline reads, HPQ Silicon deepens its stake in Novacium and unlocks new European funding pathways. Now, deepening a stake is one thing. I mean, they are moving from 28.4% to 36.8% ownership, but the real trigger here is about governance, isn't it?
Exactly. What is fascinating here is that HPQ is voluntarily dropping a special category veto share. Normally, companies fight to keep that kind of control.
Oh, absolutely. They hold on to it for dear life.
Right. But by surrendering it, they instantly change Novacium's status to a French-controlled company. That simple paperwork move unlocks access to massive European public funding programs for battery and hydrogen tech that they just couldn't touch before.
That is incredibly strategic. Speaking of strategic moves, let's look at Nextech 3D.ai Corp, trading on the CSE under the symbol NTAR. Their headline today, Nextech 3D.ai targets new markets and raises prices to drive path toward profitability. They are implementing a bold 20% to 30% enterprise price hike. Usually, a price hike that big makes you worry about losing customers.
You would think so, but here is the kicker. Their AI-driven 3D modeling platform is already built. This is a very asset-light model.
Meaning the cost of delivering the software doesn't really go up as they scale.
Exactly. So that extra 30% revenue, it essentially flows straight to the bottom line.
Which perfectly aligns with what CEO Evan Gappelberg said in the release. He noted this adjustment is specifically designed to improve operating efficiency and support their, quote, path toward profitability.
And that concept of plugging AI into existing scalable networks is a perfect segue into our next headline on the healthcare front.
Absolutely. Healwell AI Inc., trading on the TSX under the symbol AIDX. The headline reads, Healwell AI wins major U.S. health data contract and accelerates artificial intelligence integration across its global platform.
This is a multi-million-dollar, multi-year statewide contract in the U.S. They are integrating their smart AI tools directly into the established Orion Health platform, which already connects millions of patients.
So they aren't building a new network from scratch. They are just making the existing one smarter. President Dr. Alexander Dobranowski actually mentioned that advancing these renewals builds a, quote, strong foundation for long-term growth. It is a massive validation of their tech.
It really is. Now, if we shift gears from digital assets to hard physical assets, we see a similar advantage of having existing infrastructure.
Yes, we are looking at LaFleur Minerals, Inc., trading on the CSE under the symbol LFLR. Headline, LaFleur Minerals' Swanson Gold project delivers compelling economics with low startup costs and a fast route to production. The numbers in their preliminary economic assessment, or PEA, are just wild.
If we connect this to the bigger picture, the standout metric is the initial capex, the startup cost. It is only 31 million Canadian dollars.
In the mining world, getting a project off the ground for that little is radically low.
Yeah, and the reason they can do that is because they already own the fully permitted Beacon Gold Mill.
That head start is exactly why they are projecting an after-tax internal rate of return of 65%. For anyone listening, that basically means the project's profitability is exceptionally high compared to what it costs to get it running.
Spot on. And the net present value is sitting at 101 million Canadian dollars, estimating the current value of their future cash flows. Plus, all of this is built on a highly conservative base case of just $2,750 per ounce of gold.
Moving right into our final hard data point today, Power Metallic Mines, Inc., trading on the TSX Venture under the symbol PNPN. Headline, Power Metallic's drilling uncovers new copper zones and a surprise gold hit at its growing Ontario project.
This raises an important question about exploring known regions. The NISC project is primarily a copper-nickel target, but they hit a shocking high-grade core of 34.6 grams per ton of gold over 1.5 meters.
34 grams is a massive surprise hit. Their VP of Exploration, Joe Campbell, pointed out that this newly verified easterly plunge, which is basically the direction the mineral vein is diving underground, is acting as a vector direction towards a potential large nickel-copper deposit. It completely reshapes how they look at the geology there.
It really does. It changes the entire geological model for that site.
So what does this all mean for you? We just threw a lot of numbers at you today, but whether it is a 30% enterprise price hike, a radically low initial startup cost because of an existing mill, or a shocking 34-gram gold hit, these are the concrete data points that serve as catalysts. These are the exact numbers that warrant your deeper research.
And I will leave you with this final thought to explore on your own. If an existing physical mill or a single strategic AI integration can instantly reshape a company's financial timeline overnight, how many other overlooked small cats out there are sitting on dormant infrastructure?